The EPF saw second quarter investment income shrink by 0.56% to 12.32 billion ringgit as the local stock market slumped. Deputy Chief Executive Officer for Investment Datuk Mohammad Nasir Abdul Latif explains that this meant a decline in income from the domestic equity portfolio. He says most global equity markets, however, saw a recovery from the lows seen in the fourth quarter of 2018, partly due to some indications of progress in the US-China trade talks, which steadied the income contribution from international equities. Still, with the exception of the US, he points out that many major markets remain below their peaks in 2018 and trading conditions were difficult in the second quarter of 2019. On the bright side, he says the short-term volatility gave EPF a chance to buy good assets to strengthen the portfolio for the long term. According to EPF's statement, equities made up 39.2% of EPF's total investment assets in the second quarter, contributing 7.9 billion ringgit or 61.6% of total investment income. 50.6% of its investment assets were in fixed income instruments, returning 5.1 billion ringgit or 41.6% of the investment income. Looking ahead, Mohammad Nasir says market conditions will continue to be extremely challenging and volatile. While it will be very difficult for EPF to maintain the first half momentum, he believes the retirement fund will be able to continue delivering above inflation returns. Axiata Group and Telenor have called off the proposed mega merger of their Asian operations, which spans 9 countries and involves 14 entities due to complexities involved in the transaction. Norway's Telenor is the ultimate parent of DG.com. In 2 separate boss filings, Axiata and DG explained that both parties had mutually come to this decision to end the discussion after 4 months of conducting due diligence. This was also echoed in Telenor's statement to the Oslo Stock Exchange. However, both Axiata and Telenor said that they still acknowledge the strong strategic rationale of the proposed transaction. The parties also left the door open by saying that they do not rule out that a future transaction could be possible. In another statement, Axiata Chairman Tan Sri Ghazali Sheikh Abdul Khalid said that the telco is confident that the termination of the proposed transaction does not affect the group in achieving its digital champion ambitions. Axiata President and CEO Tan Sri Jamaluddin Ibrahim said that the company continues to be a growth story and remains one of the largest mobile telecommunication network operators in the region. He said that Axiata would also continue to actively explore possible consolidation and portfolio optimization opportunities. Rubber glove manufacturer Supermax Corp has earmarked 1.13 billion ringgit in capex to double its production capacity by mid-2024. Production will be boosted by 103% from 21.75 billion pieces per annum as at end December 2018 to 44.06 billion pieces per annum. At a briefing today, Group MD Datuk Sri Stanley Tai says that it expects to be a major beneficiary from the US's 10% tariff on medical gloves from China. Tai says that Supermax expects to see an additional 10% bump in export volume as a result of the US-China tariff war. He also expects the conflict to drive down the price of raw materials such as natural rubber, as it would affect demand for car tires from China. UOB Kay Hian has cut its year-end KLCI target to 1,650 points from 1,725 points following what the brokerage house called a highly disappointing 2Q earnings season, particularly for banks and plantations. According to reports, UOB expects the KLCI's earnings to contract 3.5% in 2019. However, UOB softened the cut by saying that positive news flow over the next 2 to 3 months relating to trade diversion due to the US-China trade war, the rollout of the ECRL and M&A activities may provide good trading opportunities. The KLCI ended Friday up by 4.72 points ahead of a 3-day weekend to close at 1,604.47 points. This is 0.8% higher than its close at the start of the week. Telekom Malaysia saw an uptick in its share price in apparent response to the stock's upgrade by Goldman Sachs from sell to neutral. In morning trade, the counter added 9 cent or 2.65% to trade at 3 ringgit 48. By the end of the day, Telecom's share price shed 1 cent to close at 3.47. However, this is still 2.35% higher than the previous day's close of 3 ringgit 39. Despite the call upgrade, Goldman had lowered the target price to 3 ringgit 60 cent from 3 ringgit 65 cent. According to Bloomberg, in the past 3 years and 1 month, Goldman had rated Telecom sell once, neutral once, and buy once. The telco recently said that it was confident of delivering stronger earnings for FY19 after posting a 12% year-on-year increase in net profit for the second quarter of the 2019 financial year.